Now, Honorable Minister will reply.
Thank you, sir.
बता दीजिए.
I thank each and every honorable member who has gone into great detail to see what the government has proposed in this bill. Also placed it in the context of the ordinance which is required to be replaced by a bill. And therefore this bill has been brought. And in this list of speakers, there are about 18 honorable members who have spoken. I wish to thank each one of them, sir. Shri Jairam Ramesh, Shri GVL Narasimha Rao, not in any particular order, Shri Subendu Shekhar Roy, Shri Vijay Kumar, Shri Ravi Prakash Verma ji, Shri Amar Patnaik ji, Shri Ramchandra Pratap Singh ji, Shri TK Selangovan ji, Narendra Jadhav ji, Veer Singh ji, Manoj Kumar Jha ji, Naren Das Gupta ji, Ashwin Vaishnav ji, Subbarami Reddy ji, Ram Kumar Verma ji, Binay Vishwam ji, and KK Ragesh. I thank each one of the members. My response, sir, would be in largely two silos. I want to set the context in which this bill has come to the House, trying to replace the ordinance which was brought in September, and then get into talking in response to each member wherever I could bring in specific points that they have raised and answer those as much as I can. And finally also broadly respond to the general allegations rather than a criticism which I can learn from. I'll try to address some of them because the context is relevant. Sir, I was very amused that three honorable members, in fact 4 of them, placed it in the context of the 5 Fs, the 6 Fs, the 4 Fs. But whilst not disagreeing with the list of Fs that Jairam Ramesh ji spoke about, because they are going to indicate as to how well the economy is, whether you're talking about the price of food or the fuel, all that is very relevant F, and Shri Ramesh himself conceded that macroeconomic fundamentals are fairly strong, quoting the figures for foreign exchange reserves that the country holds and so on. But I was glad that Shri Ramchandra Prasad Singh countered the argument that there is a 6th F, which is fear. I want to draw the attention of the Honorable House, sir, to say it is actually, as Ramchandra ji has rightly said, faith in the leadership, faith in the way in which this party has handled the economy all the while. And it is that faith which brought us back in the Lok Sabha election in 2019 with a resounding victory, and the numbers that we won with actually speaks of the popular support that we have got, and for which sar jhuk karke voter of India ko main naman karti hu, because that is the kind of responsibility. That victory gives you a certain responsibility. It humbles you down to say what service you have to do during the period in which you're going to be in tenure. And as a result, I think the Prime Minister, who has taken initiatives one after the other, not waiting typically that we have to wait for another budget and therefore no fiscal measures are possible till then. No, on the contrary, based on the developing situation, which is what we have very clearly explained in the statement of objects and reasons while bringing this bill. Looking at the situation which is developing and not waiting for another budget, which could have been easily an excuse for us to give rapidly a lot of consultations which happened not just in Delhi, but all over the country. I have gone to various destinations to meet with industry leaders, with trading bodies, with associations which deal with business, with general public who wanted to tell us as to what are the kind of difficulties and challenges that they're facing, collecting all of which I've come back, and every almost fortnight I have come up with measures, some of which, of course, people have chosen to say you had a budget in July, but you came up with budget after budget before the next budget is due. I am not worried about those criticisms. I understand them. I'm not ignoring those criticisms. But these are the ways in which a responsive government, a sensitive government would come with measures to make sure that we address challenges which are developing, and therefore I would think the statement of object and reasons is very important for us to read, not just to read as a part of the bill, but that is the context in which I go back to quoting Jairam, subtext, text, and context. All three are absolutely open and transparent. There is no subtext there. It so happens that I was in Goa before the GST meet, and by which time we had worked what can be possibly done in the corporate tax. And after all, these are not done with a magic wand. The system has to understand what its implications are, tax foregone, then the legal and legislative department has to work on it. There has to be a concurrence, and of course the Prime Minister and the Cabinet will also have to be later taken on board, although you brought in an ordinance and through Rule 12. It means the machinery in the government has all got to be applying its mind and only then clearing. So there is no other subtext. I want to assure the Honourable former Minister, Honourable Member, that this subtext is more in the context of what the government felt was important to respond to the developing situation, considering that the trade war between India and US and China was looming large. Everybody was speculating. There were several companies which were likely to come out of being in China, even if they kept their operations there. Largely, they wanted to shift. And there was this feeling that countries like Vietnam and Thailand were all coming up with tax concessions. And should India be waiting for a golden moment to bring in this kind of a concession instead of getting it sooner rather than later, and drawing these companies to come to India and invest? And therefore, that's the subtext, and there's no other. And that has been explained in the statement of object. Now, as I said, therefore, faith is the important thing. And because of faith, we had the mandate, we also understand the responsibility. There was also this, again, playing on words by Manoj Jaji, tone, tenor, tune, frequent rollbacks. Rollbacks are not wrong per se. And I don't want to play a game here to say how many rollbacks had happened earlier. Enough reasons, enough justifications, enough lessons learned from those rollbacks are all with me. If you're interested, I can very quickly sort of identify those specific rollbacks, which I would think this rollback, at least, some of the rollbacks which I've done post-July, at least is in response to what has happened in the ground and in the global trading arena. But if I can have the luxury of quoting the earlier rollbacks within, if I could bring in those rollbacks, it will be just a little education for me as a finance minister. And it is important for me to recall. Fringe benefit tax, 2005, introduced by one of the former finance ministers, now in the opposition, was rolled back by another of that party's own finance minister. 2005 it was introduced, 2009 it was rolled back. Then you had banking cash transaction tax. Sir, I wish to recall the kind of criticisms that we had to face. You're making people you're stopping people from drawing their money back from their accounts when there was just a withdrawal of some of the notes. What was the tax proposed in 2005, sir? Again, banking cash transaction tax. And what did that mean? For drawing money from out of your accounts, tax was going to be levied in 2005, sir. And again, by one of the former finance minister who is a scholar in economics, talks about finance with a great authority. He introduced it. Huh? I have not taken anybody's name.
Please,
I have
allowed.
not taken anybody's name.
No.
I have not taken anybody's name.
Not allowed.
All right, sir?
Please.
No, I have not spoken about anyone in particular, but I am
Sitting and
calling
commenting from
some
chair
names.
is not proper. Please,
Sir?
please, sitting and commenting is not proper on the chair.
It can't be some people's right to go on referring to issues. So banking cash transaction tax brought in 2005, taxing people for withdrawing cash from their own accounts, withdrawn in 2008. So rollbacks have happened, sir, and we've learnt a lot of lessons from them. I just want to put it in context that rollbacks do happen, but when it happens in response to the ground feedback and to help people of this country, I think all of us can welcome it. And this rollback, therefore, of the surcharge which was put in the budget in July 2019 was withdrawn, and I can explain the reasons for it. So rollbacks and the tone, tenor, and everything else, I fully take your comments, Manoj Jaji. After all, we're all from the same university league. Will I forget the university loyalties? So then, not as per the ordinance. Very valid point to raise. And I'm very thankful to Shri Jairam Ramesh to say that. But I would want to draw your attention, sir. This bill is exactly the ordinance, except for the fact that there were definitely typos which had crept in, which is one of the things that Honorable Member had quoted, saying you said that the MAT is going to be applicable when you announced it, that it's going to be applicable from 2019-20 itself. Whereas this ordinance said, or the draft bill said it is from 2021. No, that is a typo. I'm correcting that in this bill. What I announced is what is in the bill today. So there is no change at all, except there are additions which are provisos which are bringing in from the point of view of giving greater clarity. So modifications proposed in this bill as different from what, or in addition to what has been said in the ordinance. I just want to very quickly run through them, sir. Again, the presence or absence of a particular word had caused a confusion when we brought in the ordinance. The grandfathering of buybacks announced on the day of the budget for providing relief, so ordinance remains, everything about the ordinance continues in this bill. But the additions which we are bringing here are largely clarificatory additions. One thing which had been said in the budget of July was about grandfathering of buybacks which I had announced in July budget. So in that context, the proviso that we are bringing here is a clarificatory proviso for providing relief to the buybacks announced on the day of the presentation of budget. It is proposed to clarify that the buyback tax shall also not be applicable for announcements made on 5th July 2019. So it can't be that you heard the budget and after that went and announced a buyback and therefore you want the concession. That shall not be entertained. That is the clarificatory note that we have brought in here. Again, we announced the corporate tax reduction, sir, for those who are existing in today's scheme, manufacturing units which exist today. But those who are going to start their business from October 1st, 2019, the new units, and who by rule will have to show that their production has commenced before 2023, will have the lowest rate given to them. But for those, both these are referring to manufacturing only. Both these cuts are referring to manufacturing only. And then the confusion about what is manufacturing, who will benefit, what is not manufacturing, who will not benefit. So we wanted to give a negative list by giving a description of what does not constitute manufacturing. So in order to provide certainty and to avoid future litigation, it is proposed to clarify that certain activities which are not in the nature of manufacturing, such as development of computer software, printing of books, mining, etc. One of the members also questioned if it will be applicable. I think it was Mr. Patnaik. So, mining, etc., shall not be treated as manufacturing for the purpose of allowing lower taxation regime available to new manufacturing companies, those which will benefit by the 15% basic rate. So that clarity we had to bring in, so that's a provision which is getting added.
Included any other business as may be notified by the government from time to time. That's a bit of an open-ended clause. I'd request you for clarity on that.
I thought that's the one which is going to give us clarity, so that every now and then if there are questions, we'll be able to at least come out with a notification to say that. But I'm not sure if removing it gives a clarity to everybody outside, but maybe not to the government itself. So I'll have to think about it. Thank you for highlighting. The other one, where again a proviso had to be added, was consequences of failure to satisfy conditions which are laid, which are normal conditions. It is proposed under that. It is proposed to provide that a new manufacturing company under 15% taxation regime shall have an option to shift to the 22% taxation regime in case of failure to satisfy the conditions specific to it, such as the use of second-hand plant and machinery. So just as we allow an option for those who are under the existing regimes with all the exemptions and everything else to shift from there to the new regime by foregoing all the exemptions that you are enjoying now, or by exhausting all the exemptions that you are enjoying now and to move to the new regime, we are also telling those who are coming under the new regime, the new manufacturing companies, who are coming under the 15% taxation rate, to have an option to shift to the 22% taxation regime, which is also under the newer September 20th announcement, in case, just in case, they fail to satisfy the conditions specific to it, such as the use of second-hand plant and machinery instead of totally new ones. So that is a clarity. So similar clarificatory proviso are getting added to this bill, which are over and above the ordinance. One other point which I'd like to elaborate here is again the grandfathering of unabsorbed additional depreciation. It is also proposed through this proviso to provide grandfathering for unabsorbed additional depreciation up to 31/3/2019 to the companies opting for lower rates of taxation. So that's being elaborated. So everything that is being brought in addition to the ordinance now becomes a bill. In addition to what has come through the ordinance, there are a few such provisos for clarificatory purpose which are being added. I can go through each one of them, but I'm sure you've seen the bill itself, and therefore I wouldn't elaborate further. Sir, cutting down the corporate tax, sir, is not just good for headlines. It is not just good PR. It is not just good atmospherics. It is good reform. And this government under the Prime Minister, now in the second term, after taking up a lot of reformatory steps in the first tenure, is further committed to doing a lot of reforms, and this step has come very quickly depending on the global trade environment and the investment climate in India, and further reforms shall continue. So it's not just atmospherics, it's not just headlines, it is also good reform that we want to go ahead with. Sir, ordinances. Quite a few members have asked as to why do we need ordinances? Why can't we do straight ahead with the bill? As I said, waiting for the next budget is by itself a delay which we didn't want, considering the environment which was prevailing all over the world. We wanted to attract investment at the earliest, so we did come ahead with the ordinance. But are ordinances new? Particularly those related to finance. Are they new? Are they rare? Are they never done before? I just want to explain, sir, giving some data. Finance-related ordinances have been there before. Governments have used them because there is a reason. When the parliament session is not on and the urgency is felt, governments do have the discretion and governments choose to use ordinances. Between 2004 and 2009, under the UPA 1, a total of 36 ordinances were passed, of which 10 were finance-related ordinances. Between 2009 and 14, a total of 25 ordinances were passed. 6 of them were related to finance. So it's not a thing that it never happens. It is completely the discretion of the government to feel what is developing in the ground, and if they think it's necessary, even finance-related ordinances have been used. I just want to put that in context. Sir, now I go to addressing the specific issues raised by honorable MPs. They are again not in any particular order. I think I had already referred to Shri Amar Patnaik ji talking about mining. This does not, the new rates don't apply to mining because they are not manufacturing. Mining may deserve a lot more support, but then this support is not for mining. So then Shri Ravi Prakash Verma ji had asked, why is this only for foreign companies? The concessional rates provided in the ordinance and now in this bill, sir, are applicable only to domestic companies. We are not giving to foreign companies at all. Sir, Shri Ramchandra Prasad Singh ji had asked about the direct taxation code. It's a very important point. The report of the task force has been submitted. We are certainly looking into, and it's under examination of the ministry. So then Shri Vijay Kumar had talked about why this 15% is not being given to existing companies. Sir, the idea of giving a lower tax rate for new manufacturing companies is because we want fresh investments to come in. It should not become that a whole lot of existing production capacities and investments just transferred to the new one with no additional new investments coming in. So the objective itself is to draw new investments, and therefore we had taken a conscious call on that. Again, Shri Amar Patnaik ji had said, this would not benefit MSMEs. No, it will certainly benefit, sir, because when we have said this concessional rate of 15% is being offered to manufacturing companies, it's all companies, big, small, medium, micro, all of them get this rate. So long as you're a part of the Companies Act, the small ones, medium ones, all of them will benefit out of this. So then there was also this question about consumption rate. A lot has been said about declining consumption. I want to just give some statistics. Private consumption during UPA 2 was 56.2% of the GDP. This increased to 59.0% during NDA 1. even in the first half of 2019-20, this year, private consumption is 58.5% of the GDP, still about 2.2 percentage points higher than that was during UPA 2. So I just want to underline that decline is between the first and the second NDA, but when you compare it, we are very clearly at least 2 percentage points higher than what we were during the UPA times. Sir, a bit of an elaborate answer for one particular issue related to what Honorable MP Shri Veer Singh Ji had raised. This is about personal income tax. Other than the fact that the direct taxation code is under examination, other than the fact that I've had quite a few inputs coming from people who think it's time now income tax has got to be considered, I'm not commenting on it, but I would want to draw the House's attention that a lot of personal income tax related steps had been taken. I just very quickly want to highlight that in the past 5 years, government has provided income tax relief, and a few steps I want to highlight that under the Finance Act of 2014, the basic exemption limit was enhanced from 2 lakh to 2.5 lakh rupees. Further, the said act also increased the limit for claiming under deduction under Section 80C of the Income Tax Act from 1 lakh to 1.5 lakh. That was done as a step in the personal income tax arena. Again, in 2017, the rate of income tax was reduced on individuals whose total income is between 2.5 lakhs to 5 lakhs from 10% to 5%. Standard deduction, sir, of 40,000 was introduced for salaried taxpayers as well as pensioners, again in 2018, which was further increased to 50,000 rupees in 2019. And lastly, sir, 2019 also provided for full tax rebate for individuals having taxable annual income up to 5 lakhs of rupees under Section 87A of the Income Tax Act. Sir, Honorable Member Subbarami Reddy ji, I must thank him because he has every now and then given us a lot of constructive, good suggestions in order that we handle the taxation-related matters. And here, I would underline the point that the issue that he raised, I love tax exemption for infrastructure sector. I just want to convey the point that the policy of the government is to phase out all exemptions and to reduce the tax rates. However, considering the importance of infrastructure sector, investment-linked benefit under Section 35AD is allowed to infrastructure sector and has not been phased out. It is still intact. For the companies which opt to remain in the old tax regime, under the new corporate tax reduced rate regime, we are talking of option for companies to remain in the old regime. For them, that still continues. Further.
Please.
For the last 2 years, please examine this point.
Further, sir.
See, even the government
Please take your seat now.
Please excuse me. Government policy, even the government policy, not to give exemptions and allow only reduction of taxes, we welcome. But at the same time, since you accept that infrastructure is a very serious problem, so you examine that whether it's possible, you can do again, redo what has been given 10 years back for new projects.
Thank you.
Sir, but under 80, 1A, I think, being a profit-linked deduction, that has been phased out even in the old regime. Probably that's what you're referring to, that even in the old regime, what has been removed is the...
Please, no.
All right.
Infrastructure for 10 years. Only these 2 years it has been removed. which is absolutely, industry is crying. So this point you can.
Please take your seat.
So, however, 35 AD investment-linked deduction for specified sectors, including infrastructure, has been retained in the old regime. So, I just wanted to underline that, sir. Sir, very relevant point about how the rural areas don't seem to have investment capital. Sri Ravi Prakash Vermaji had raised the issue saying Grameen Punji and also mentioned about rural consumption. I just want to respond to him to say that when the feedback that I had received gave me a picture that liquidity is not moving towards the rural areas. Other than increasing the outlay for Manrega, which is actually the wages going into the hands of people, which is doubled, I can give you the data. We also wanted to make sure that liquidity reaches them either through the banks or through the NBFCs so that they can, small, medium, big, whatever, they can buy whatever things that they want to do, whether it is FMCG goods or buy a tractor component or a motorbike or a scooter or a loan for building house. We wanted to, education, farming loans or MSME. We made sure that we had the banks. First of all, we established that there is no liquidity problem with the banks. Then we wanted that to be given further to the NBFCs and for the banks themselves to go to the hinterland and not just cities like Mumbai, Delhi or Calcutta. So we said 400 districts, you would go, all the banks and the NBFCs would go and make sure that all kinds of loans are provided for people who approach them following every prudential norms. We were not violating, we were not doing the old-fashioned loan mela. I would like to present before this House that just in the month of October, sir, under the various headings, home loan, vehicle loan, education loan, for each one of them I can give the figures separately, but I'm just reading very quickly. Education loan, other personal loans, MSME loans, agri loans, NBFC loans, and NBFCs for onward lending. All put together, 2,52,000 crores have been distributed. And strictly for NBFCs alone, we have given 19,627 crores so that they can carry on with the onward lending. If that's the picture in October, in November, sir, the total outreach program in November, again dealing with MSMEs, NBFCs, retail, agricultural sector borrowers, 2.39 lakh crores have been distributed just in November, sir. And specifically to the MSME sector, out of the total, the public sector banks alone have distributed 35,775 crores just in November, raising the total customer outreach credit disbursed to MSME both in October and November put together to 72,985 crores. So we have also done more on NBFCs in the month of November also. So this point about are we missing out the rural areas? Are we missing out on agriculture? Are we missing out on MSME? No, I wish to tell the House, honestly, each one of them have been approached, and October, November outreach programs outcome is what I'm presenting before you, sir. Other than this, I have made sure that government departments, central government departments, or agencies under the central government, whether they are public sector, enterprises or CPSUs, any dues to the MSME should all be cleared. And I must say, within the month of October, within the month of entire October, 1st November tak, we had cleared a due of 61,000 crores, which was all pending with the government, all to the MSMEs who had rendered goods or services to the government of India. Even that was cleared from our side. So repeatedly we are asked, so why is this? Why is this situation? Why do you have to fund money? Why do you have to give money to the banks? Sir, I would only recall how two things were inherited by us. And that is very important to understand the background of this entire debate. So in 2014, a lot of burden on the election leave was passed on to the next government. When we came in 2014, I'm compelled to say this here. For containing the fiscal deficit before 2014, before the new government came, within the budgeted 4.8% of the GDP then, the then government, UPA 2, left a huge burden on us of unpaid bills for the next government. So we had to inherit it. And what was the size of that unpaid bill which was left? And we had to take it up. The under-recoveries of the oil marketing companies alone were said to be over 1.4 lakh crores. The under-recoveries, and that was left without even a mention. When we inherited it, we've inherited that on our head. And that payment had to be made by the new government. The fiscal deficit figure was all fine for the UPA 2 when they left the government. That is one thing which is openly got to be recognized. And second, which has to be recognized, is gross advances which were given out by the banks during UPA 2. We've heard a lot of people talk about it. Prime Minister spoke in the Lok Sabha about how much had happened during that phase of phone banking. Sir, up to March 2008, gross advances of commercial banks were 25 lakh crores, 25 lakh 3,439 crores, up to March 2008. March 2014, before the new government could come, before NDA 1 could come, before Prime Minister Modi could come, that number from 25 lakh crores had gone up to 68 lakh 75,748 crores. Lent money to every Tom, Dick and Harry, Jija, Batija, everybody, that many of them are NPAs today. And not just on that morning that they became NPA, gradually, 2 years, 3 years, in the last 5 years, to remove this toxic NPA number, banks had to be given infusion of equity. And this, sir, between 2008 to 2014 is a 275% increase in bank lending, which I think nobody in banking sector, banks means a lot of conservatism. Here is outlandish lending which happened during that phase. And therefore, today, if we are managing the twin balance sheet problems, banks and the corporates' balance sheet have all got to become healthy, and then investment has to come in. That is where we have committed ourselves for keeping up the public investments going, particularly in sectors like infrastructure. Otherwise, money is not going to go down. Banks may sit with the money that they have, the liquidity that they have, and they don't lend. And everybody who speaks about fear factor should please now tell me. I'm not saying every harassment is right. In fact, I'm going around meeting with tax administrators all over the country, saying, please, to reach the target, you do what is due. In fact, we were the ones to bring in faceless assessment so that no face-on-face interaction happens with tax authorities. But that doesn't mean that if there have been wrongdoings, the government cannot take action. And if legitimate action is taken, I'm not justifying harassment. No harassment should take place anyway. And I'm closely following every tax administrator in that sense. But if harassment is happening, I'll be quite keen to address it so that it doesn't happen. But then, if people are being followed for wrong things, and if there is an element of harassment there, I condemn the harassment even there. But then, People can't be left off without monies being brought back, sir. That is public money. I need to confiscate those assets of people who have left the country after having enjoyed this large ease. The people's properties are being attached. Proper legal action is being taken. Those monies are coming back to the account. And that is why I'm sure this House recalls myself or MOS Shri Anurag Thakurji's answers in the Parliament, saying the NPAs have come down from 10 lakhs to 8 lakhs because we've been after them and getting the monies back to give it to the banks. So that action is also happening. So I just want to be sure that when people criticize this government for the economy, welcome. Please do criticize. We will learn from what you're telling us. We'll certainly hear all the criticisms. But to digress from the facts, like for instance today, from my debate in the Lok Sabha, of course I can't read it out nor refer to the debate there, culling out what is convenient and saying, oh, she said she doesn't eat onions. If only people understand what I said in the debate and in answer to a particular question about do you eat, and instinctively, yeah, I said, no, I don't eat, or my family doesn't give so much importance for onion. That becomes a major criticism of this government when I've spent more than 20 minutes talking about what kind of steps this government has taken for better management of onion distribution, for the use of public money to have greater storage of onions, and also making sure that urgent purchases are happening from Rajasthan, which truckloads are going to Jharkhand, truckloads are going to Bihar. I've given all those data. But no, oh, she's an elitist. She talks about not eating onions. Oh, she's this, oh, she's that. I just want to state one thing, sir. Just one thing. Huh? No, you may not have said it. That is where, oh, thank you. I want to say, sir.
Please.
Thank you.
Please.
Sir, therefore.
Please.
Oh, don't worry. Therefore, sir, I want to take this opportunity to say, when criticism inside one house is very different from criticism in another house, when criticism inside this house is very different from criticism outside the house by the same dispensation, same party, I really am tempted to take it up, sir. Maybe not especially because people in this house, those few who have chosen to be here till my reply happens, may have not said it. But after all, it's the same political party. Does it stop me from responding to it? And therefore, oh, you don't choose the place, ma'am, I'll do it. I'll choose the place. And if I've not named anybody, I don't think anyone should have an objection, because it's a criticism on the economy. It's a criticism on the economy, and I have every business to answer, because this government is continuously responding to steps that have been taken. You may like it, you may not like it, you may think it's adequate, you may think it's not adequate. I'm quite willing to buy that. But to throw an allegation that this government is elitist, Ujjwala scheme is for elitists, Jan Dhan Yojana, is it for elitist? PM Awas Yojana, is that for elitist? So, Ayushman Bharat, is that for elitist? Elitist we are, is it? I want to recall a statement made by one of the former finance ministers, sir, when price rise was the issue then, and this I'm referring to 2012. Honorable members, kindly hear me patiently. 2012, sir, when price rise, at that time, all of us know, food price inflation was touching the sky. General inflation was beyond control. What was it? India was a fragile fight then. What was the statement given by people who accuse me of being elitist? When I'm talking about onions being sent from the government's efforts to all states, what was the statement given, sir? Then in 2012, when price rise was high, when the urban middle class, I'm quoting here. I'm quoting, sir, I'm quoting here. When the urban middle class can buy a bottle of mineral water for rupees 15 and ice cream for rupees 20, why do they make so much noise about price rise? Oh. When the urban middle class can buy a bottle of mineral water for rupees 15 and ice cream for rupees 20, why do they make so much noise about price rise? Unquote. And these are people accusing me of being elitist, this government of being elitist. I
माननीय मंत्री जी।
absolutely condemn this approach.
माननीय मंत्री जी, एक मिनट, please, honorable members.
Yeah, you're talking about taxation and onions.
माने प्लीज,
Sorry.
माननीय मंत्री 6 बज चुके हैं, इस बिल के डिस्पोजल होने और स्पेशल मेंशन होने तक हाउस के बैठने की आम सहमति कंसेंट है प्लीज प्लीज।
So therefore, sir, I hope I've responded to most members and their questions related to the corporate tax reduction and the timing. It was important that India remained competitive in the global scenario. We are making specific attempts to talk to corporate sector captains all over the world to make sure that they come and invest in India, thereby create a greater momentum and opportunities for greater job potential. So with all this, when the corporate tax ordinance was brought in, and now the earliest session is this session, and therefore we are bringing a bill, I seek the support of all the honorable members who are here. Thank you.
Thank you. I shall first put the